All right. Hey, everybody. Welcome. Thanks for joining us today on another review from the markets here. We're Maxsi.io, and we're going to dive right into it this week. We're going to start with the DXY, which is the dollar index. So it's tracking the strength of the US dollar. And this is what we were looking at in our last video. We were seeing it bouncing off of the bottom of this channel that we have marked out here on the screen. And we were expecting it to continue to run up. And as it runs up, we were expecting to see the stock and equity markets start to kind of sell off because we observed that the DXY trades in inverse with the stock and equity markets. And here we are checking it out, and it looks like exactly what we thought would happen did happen. You can see that the DXY has run up. We've actually run up, and we're right at the top of the channel, which is also correlated right with the Trading Buddies strength band. So this is about the range where we're going to expect for it to cool off on its run and find some resistance. And so it's kind of an important level here for the DXY. If we do find that resistance and push back down, remaining in this channel, then we could see that stocks and equity markets in the coming weeks start to kind of climb again as the DXY cools off, and the markets kind of come back. So this is what we have pulled up here. First thing we want to look at. And
so
played out just
so
like
yeah, we've been tracking this for like a few weeks now, I think, and we started tracking it when it was at the bottom of the channel, and we had told people that like it'll bounce, and it did bounce, and we did end up seeing the stock market pulling back this week. We can see that right here. See. This is S&P 500 here, and we can see how it topped out and it's been dropping, and so the DXY, it did reach that's the indicator that we have. That's a custom indicator. It's called the Maxsi Trading Buddy, and how it works is that bull and a green band means we're going to be in a bullish trend or an uptrend, and then if we get a bear signal and a red band, it means that price is gonna be in a downtrend or a bearish trend. So we did see it top out, and then it's just been sort of in this channel that we see now, and now we've reached the strength band, and this is the weekly chart for the dollar. So the strength band kind of acts like a mean reversion sort of area. So like price tends to retest it, in a bullish trend, you can see price dropping to it, but then the band should hold as support, and we should keep bouncing on it. Mm-hmm. And in a bear trend, the opposite kind of happens. So it'll be interesting to see if we actually flip this to bull, if we close above it and bounce on it, and that's the important thing. Because we can always kind of go above and fall back below, and that's kind of that's called a deviation. So that wouldn't be good. So it's kind of like that'll be a bull trap.
Yeah.
If it goes above and falls back down.
Classic bull trap. But we are definitely right on this important range here to track, which it looks like this is going to be where we expect to find resistance, and we're looking for it to now be rejected here, move down, and that means dollar losing a bit of strength, equities stepping in to kind of fill the void and gaining some strength, which is actually going to be interesting because a lot of traders right now in the retail kind of chatter forums and stuff like Wall Street Bets or anywhere where people are trading and talking about trading, a lot of everybody is expecting the markets to sell off, and and as much as I hope people don't get wrecked, it is looking like we got the sell off already, and now we're looking to cool off on this sell-off, and probably going to see the next few days, early next week, likely bouncing and moving up if this DXY strength band holds as resistance. So
exactly. So if the DXY, the dollar, if it pulls back, then we tend to see stocks and crypto go up, and also next week is the monthly close that's coming up. And if you look at the monthly, stocks don't, right now the candle doesn't look too great. So like on a monthly time frame, it still looks kind of toppy.
Yeah, when you change the time frame like that, what we're visually changing is each one of these candles now represents a full month. So
Exactly.
this is quite a long range that you're looking at, even though the chart's not super massive.
Exactly. So now, for example, we changed it back to the weekly now. So, but in a shorter time period, shorter in the sense like a few weeks out, you could, if the DXY, the dollar pulls back, then you can see stocks do a retest, or we go up a little bit, and then it'll be important to see if it actually makes a new high after that. If it gets rejected at resistance here on the weekly, and then tops out there, and then it continues falling, then on the monthly you can. This might seem that it could be that it's topped out.
Yeah.
So it'll be interesting to track this and track it with the dollar, because like they kind of move. How the dollar moves affects stocks too.
Yeah, this is also a good metric to track if you're a forex trader. So if the DXY is gaining strength, then we're expecting to see the dollar gain strength relative to foreign exchange currencies. So you'd expect to see the dollar becoming stronger as the DXY climbs. The dollar should gain strength relative to like the euro, the Great Britain pound, or the won, the yuan, all of the other foreign exchange currencies.
So I just changed the chart to the monthly for the DXY, the dollar, and it looks pretty bullish why does it look bullish? First, we're still on a bull print, and this just seems like we're bouncing off
right on the band,
the strength band.
Dang.
and that's a bullish candle compared to the last candle.
Then it's important to note the monthly is closing in 3 days. So if it
closes
like that, that's a very bullish close. Dang, I hadn't looked at the
very
monthly.
Bullish close. And the starch RSI, it's another indicator which you could use, but it looks when it flatlines like this and it's at the very bottom, it's been oversold for a long time.
Yeah,
you see when it's been chopping around here. So if it starts running up, it has a lot.
It has a lot of room on the monthly there. Dang, I hadn't even watched the monthly chart. That's interesting. That's a good one to catch. Dang.
So if the monthly stays bullish for the DXY and the monthly for stocks close bearish, then we could see stocks definitely have a pullback. In Q4, in the coming months, basically.
Absolutely.
But right now,
all eyes on the DXY, it looks like. So is there some big weekly closes, targets, and then clearly the monthly is starting to look quite bullish. The weekly looks like it may be running a little bit out of steam. We are hitting the top of the channel. We're possibly going to get rejected here at the strength band, but it is going to be an important level to track and to watch. Because if we do not get rejected here and we break out of this channel, then it will continue to run up, and we expect obviously the inverse to be true for equities. So if the DXY does start to break out like that, equities probably continue their sell-off, and then all the people on Wall Street Bets and all the short sellers and retail traders who are calling for a dump will get what they want. So
And also, like we said, the DXY of the dollar also affects the crypto markets.
Yeah.
So I've changed the ticker to Bitcoin here, and we can see we talked about this for the past, the last time around, that it's very clear on the monthly, if I change to the monthly chart, that it's been in a rising wedge, which is typically bearish. Here's the chart that we shared.
Yeah, rising wedge with earlier, falling volume. So we got a divergence, a bearish divergence.
Bearish divergence, that's right, where you can see volume going down but price grinding up. And it failed and we talked about this. See, like it failed to close above our indicator strength band.
Mm-hmm.
So it seems to have kind of topped off there. And we had 3 days to close, but if we top off below the rising wedge, if I change the weekly, you can see it more clearly.
Yeah.
We kind of already broken down.
Yeah.
And right now prices, the weekly candle just closed. It closed in a doji, which means it's undecided.
Yeah, it's like a neutral signal there.
Yeah, it's like a neutral signal. It buyers and sellers
could kind of go either way from here. But breaking down from the wedge and the divergence that we're charting there are kind of biasing, at least my opinion, a little bit bearish here. I think we do continue down, especially if the DXY starts to run.
Yeah, especially if the DXY starts to run, then it's like goodbye crypto,
Yeah.
And because this is the weekly chart, so the week for the weekly time frame, we could get a retest like this, where we retest resistance, and then we finally
yeah. So that's an interesting thing to note here, because since we've lost that wedge now, to try to get back into the wedge, the wedge line we have drawn there should now act as our next resistance level. So if we do get a climb back up in Bitcoin, it'll be important to watch that climb and see, is it able to breach back into the old wedge, or is it being rejected below? And if it's being rejected below, that is more bearish sentiment and should strengthen our resolve to be short on these assets.
Exactly. So in terms of short term, you could kind of play a retest, and it's the same thing with, actually this goes also in line with the stock market.
Yeah,
because I think we could see a retest with the dollar dropping, and then we retest the wedge, and we're looking at Bitcoin, so the whole crypto market moves with Bitcoin.
Yeah,
so that's why we primarily track Bitcoin. But if you see even Ethereum, it's in a wedge, it looks pretty much
similarly breaking. It's a little more bearish. That's a little bearish, more bearish than
because see, you can see how the wick, it retested the strength band, and it got rejected and closed below. So even if Ethereum could also have retest like Bitcoin, do another retest, and then continue falling.
Yeah, and this is a pretty clear indication to us that the markets are still looking kind of bearish. They're trying to push down, and in general, the mainstream kind of news media around these types of price movements are going to be pointing at real world news to kind of find some sort of reason for this that isn't just in technical analysis. And we got a pretty good chunk of news this last couple of days here, where the Treasury has proposed regulations. So it's nothing is set in stone yet, but the proposition was published that were regulations for how the USA should regulate the crypto market. And it basically, I don't know, I read through this, and it basically demonstrates a lack of understanding of how the crypto markets work. But in a nutshell,
no surprise.
Yeah, no surprise there. But in a nutshell, what the proposed regulations kind of are saying is that basically any application in crypto, like decentralized platforms or centralized exchanges, any application that allow for a user to interact with their wallet, like sign into the application with their wallet, even if it is to facilitate a peer-to-peer transaction, any one of these application that facilitates such activity is categorized as a broker under this regulatory framework, which is nonsense. I mean,
so the language is very wide and unclear.
It's extreme. Yeah. It's basically, it's like Mark II of the everything that isn't Bitcoin is a security approach here. So it really demonstrates they don't know what it is that they're regulating. They don't really understand the ability to actually enforce any of this stuff, because I mean, realistically, the crypto markets, much more so than the US stock market and equity markets, are an international network. And a lot of these applications run on public blockchains that are, maintained by an international network of participants. And they are deployed onto these networks in a way that isn't centralized, where the SEC or a governing body of any sort can't just come knocking on your door and be like, hey, this is breaking regulation, shut it down. You can't really shut down protocols once they're deployed onto the blockchains. And right. with this specific language within these guidelines for these regulations, it would include like everything in crypto. So, there's
so even your wallet.
Yeah, like your like MetaMask, basically, where you can send from one wallet to another wallet just using this open source wallet software. That would be classified as a broker. If you're like, there's NFT markets out there, like the Stoner Cats, for example, where you can like own the Stoner Cat NFT.
Oh, with like Ashton Kutcher,
and Mila Kunis are
Mila
like
Kunis, yeah.
They're it's a fun project, they're embracing the technology to try something new effectively. But what it does is, they sell these NFT assets, and then those assets you sign into their website, and then that gives you access to watch this show that they're producing. The only way to watch the show is if you own the asset. But with these regulations, the framework effectively says if I have to log into the website using a wallet, you are a broker. And that just doesn't compute really with the reality of what's happening in the crypto space and the decentralized markets. So
Stoner Cats would essentially be
they're a broker.
To go through.
and being a broker has long-reaching implications. You need quite a few very specialized licenses to operate as a broker within the United States. Right. So this would shut down everything effectively. And like I said, you can't shut down most of this stuff. So very disappointed, honestly, to see. It's been years and years in the making. We've been, as the crypto community, at least as people who are participating, actively in these crypto markets, we've been asking for clarity, for guidance from the regulatory bodies here to kind of give us, direction of what is and what isn't allowed. And it's kind of disappointing to me to see, the framework here being published by the Treasury to, propose these regulations that just demonstrates such a lack of understanding. Right. It's kind of sad, but
they're just casting a wide net, I feel,
exactly.
Trying to
it feels like they're
clear
pushing
the way
out
before like BlackRock and Fidelity and all these big players
exactly.
Take
and
control.
Once you got the big players, especially in the United States, that's kind of how it works. Like once the big players have their foothold, then the legislation will change into a favorable environment for them to flourish. But before they're in the market, they're basically stomping everything out, it feels like. So kind of disappointing. I do understand the inclination to be so aggressive because there's a lot of crap happening in crypto that just is nonsense and should be regulated. And that's what we want. We want the regulators to protect us as users from this nonsense. And you pulled it up right on cue here.
Yeah,
the big big time nonsense this week. PEPE is a meme coin. Which is basically just, it's a token that, you could throw at each other for shits and giggles is kind of the whole use case for this. It's not really, there's not really like a utility behind this. It's just for fun, effectively, kind of like Dogecoin or Shiba Inu or all of these like memeable currencies. It's just, It's about community. It's about, dicking around. And so this last few days here, PEPE coin had some pretty big drama going on, where basically the way that PEPE coin launched its token, they printed, issued effectively onto the Ethereum blockchain. They issued 420 trillion tokens, and then 94% of those tokens they put into a liquidity pool, and the remaining 6% they kept in their treasury wallets, for paying for listings on exchanges, for paying for advertisements, or for paying maybe like influencer, like whatever they wanted to pay for. And so there's been apparently some infighting drama within the internal teams there, and 60% of that treasury wallet has been drained and dumped across the centralized exchange market, which is actually kind of interesting. They didn't go the decentralized route, but because they've dumped,
is because like liquidity has dried up completely.
That's the other side of it, because decentralized exchanges
in a bear market.
decentralized exchanges move very quickly, and the liquidity can come and go very, very quickly. And like I said, initially, the 94% of the entire supply was put up into liquidity, and the team said that they then burned the liquidity, which generally means they've sent the ability to transact with those liquidity assets to a wallet that nobody has the keys to, so that nobody can use it. There isn't really great doing some due diligence on PEPE token. I have a hard time seeing that they actually did that. So
so on chain it isn't.
On chain
it's hard to sort of see that evidence.
It's kind of questionable, honestly. As PEPE token has been rising meteorically, I mean, it did come up like thousands of percentages, and lots of people got involved because of these huge returns that they were seeing. But while that was happening, the liquidity was pulled out of the markets and dumped. So, they basically were pumping this price and then dumping their assets onto people who are trying to make a quick buck on these meme coins, on the trend of the meme, trending or whatever.
Right.
And, those people are basically your exit liquidity for these insiders. And now the insiders are fighting each other. And effectively what happened this last week is this treasury wallet basically supposedly, if you read what their official announcement is, it supposedly had 5 wallet signatures required, and 4 out of 5 need to be used. But that's not even true either, which is like the crazy part, because it was actually 8 signatures and it required 5 out of 8. And so I don't know, red flags left and right here. But basically what happened is that some of the team members got together, used their wallets to sign and then remove the funds from the treasury wallet and dump those across the centralized markets for, I think, around $15 million, which dropped the price about 20% and now has left the future of this project kind of in limbo. So not the best look for PEPE. I mean,
it's a meme coin.
So
I mean,
we've stayed away from it from the beginning. It's fun to watch it from a distance because you can't really get burned if you're not playing along. But a lot of people aren't necessarily that savvy when it comes to what these assets are and how they're distributed and all that stuff. And a lot of people just see the memes. They see their favorite TikTok influencer talk about it.
Yeah, they just go by hype without actually understanding how the price sort of moves this, and only how the hype moves it, and then they're left just holding the bag.
Yeah, and so
when price drops,
I would say that if you had any confidence at all in PEPE before this recent event, I would expect that confidence has been shaken, if not completely destroyed. Personally, I would stay away from PEPE.
Stay away. Yeah.
Not just sell what I have, but I'm also I'm not going to try to short sell this stuff either. There is too much potential for this insider group to manipulate the price and wipe out short sellers. It could absolutely pump aggressively, and that's kind of par for the course for these shitcoin assets, for lack of a better word, where the news is bad, everyone expects bad things, people start loading up shorts, and then boom, the price shoots and liquidates all those shorters before it dumps. So personally, I recommend caution. I recommend stay away. Don't try to play this. Honestly, there isn't a good way to play these assets when there isn't real honesty, there isn't real transparency. And even in these Twitter posts that were made about this incident, there is I don't want to outright say lies, but absolutely misrepresentations of what the situation is and how this token is distributed. Right. And so, they start this whole...
It just seems sketchy, the whole thing.
They start the whole Twitter thread with we're trying to be as transparent as possible. And then they say, we have a 5 multi-sig wallet. And then you look on the blockchain, it's wait, this is an 8 multi-sig wallet. Where's the transparency here? So
right.
Red flags galore, more red flags than Minesweeper on Expert. So stay out, and if you are into it, if you're at a loss, I think take the loss now and run is what I would do. Of course,
caution is the word.
Of course, do what you're comfortable with. And if you like to,
risk manage,
if you like to roll the dice on craziness, you're in the right place.
Then it's gambling, you know.
Yeah,
that's
yeah.
What
just understand that you are gambling, and you're gambling where the counterpart to your gamble is dishonest, greedy people and dishonest, anonymous people. So there's no accountability. There's no expectation of a follow through if something happens. So yeah, this is kind of a wild time here in crypto. But as a quick recap, though, we're watching the DXY. You have it pulled up there. It's reaching here on the weekly a pretty important resistance level. If we can push beyond this, which again, if we switch to the monthly view, it looks like we could push beyond this and move quite a ways up. And if that does happen, we will see the equity markets continue to sell off, and we'll probably see the QQQ, so the NASDAQ, the S&P 500, all of these indexes probably continue to sell off. And if we don't manage to hold above it and we pull back, then we should see a cool off, in the DXY as it kind of pulls back down, and the stock market can then recover a little bit of the sell-off that's happened in the past couple weeks. And, and then all of the people on Wall Street Bets who are currently, very bearish and expecting everything to fall might get rocked a little bit here in the short term. Of course, that's just short term. And then same goes for Bitcoin. Bitcoin, we're seeing, has lost its wedge, which we've been tracking. The wedge initially is a rising wedge with a falling volume, meaning it's a bearish divergence to begin with. So we are expecting at the very end of the wedge, you would expect it to fall down versus pump up and break out of the wedge. And so that is starting to happen here too. But the last week's candle has closed in a doge. So it's a neutral signal.
Undecided neutral.
It's not screaming, it's not screaming, hey, we're going to dump. You can see actually with the trading buddy here, with the Maxi trading buddy indicator, we are still bouncing on that green strength band. So we do have a potential there, like you've drawn the line of a retest, meaning we're going to maybe climb up again a little bit. And then the important level to watch will be what the wedge channel was. So the lower edge of our wedge is now going to be the resistance level, exactly. And keep in mind that we've been looking at this and tracking it for a couple months now, and kind of like saying all of this stuff. And then, of course, keep in mind,
it's been playing out exactly.
It's been playing out just as we have expected with our technical analysis. But keep in mind, most people are going to look for real world news or like a reason, like why is it selling, and then you're going to see people pointing to like the Treasury regulation propositions and, other real world news that is not necessarily good news for the crypto markets, but it's not, in our opinion, it's not the catalyst behind these movements. The movements were already in the charts. We knew this was going to happen, and it's just coinciding with this kind of a news. That news, again, very disappointed as someone who participates in the crypto markets. They should be a little bit more specific here. Cryptocurrency isn't an asset class as much as it's like a technology sector at this point. There isn't. It's not just, you're not just trading an equity asset. There is a whole world of things. It could be a currency, it could be shares in a company, it could be artwork. There's so many different things that these crypto assets can be. It's very, very sad, in my opinion, to see such a blanket, it's basically we're back to everything's a security. So very disappointed to see that. And then, of course, the PEPE news is just kind of like icing on the shitstorm cake here, where where crypto, not the best, but there is real value, there's real projects, real things being built here, and PEPE just never was one of those things. So when we see this kind of like the red flags popping up everywhere, it's kind of time to keep your distance, even if you think it's so clearly going to go and fade into obscurity. And I agree with you. I think it will eventually fall to nothing and out of like public opinion and out of the zeitgeist. But before that happens, the shenanigans will run rampant, and I am worried to be exposed to that. So I'm staying away. But yeah, I think that's what we're looking at this week. And I think let's keep an eye. I think the big takeaway from this week is all eyes on the DXY. Let's see how the DXY closes. It's going to be all important here. And once that closes, and we get more clarity on the direction, we'll definitely have a much clearer indication of which direction the rest of the equity.
After the monthly close, we'll track the next few weeks.
So far, it's been playing out exactly as we've been predicting, and now we have reached very important levels here. So let's keep an eye on it, and join us in the next session here, where we'll see how all this stuff has fared, and we'll dive into it again. Until then, though, stay safe, stay away from PEPE, and have a great time, guys.